For more insights on the continuing conflict, we are joined by Taimur Baig, who is chief economist at DBS Bank. Taimur, good to have you on the show. Now, based on how oil and equity markets reacted today, are we moving into something more dangerous and more persistent for the global economy?
I'm afraid so. I think the premise in the run-up to this war, which was a fairly well-telegraphed war, but the premise was it will be short-lived and it would leave the Straits of Hormuz open. I think the markets and general observers around the world are all taken aback by the ferocity of the attack that Iran has endured over the last 8-9 days and the frequency with which it is retaliating. And we are heading into a very dangerous area where instead of military targets being the primary source of conflagration, civilian targets or energy infrastructure, all of those things seem to be on the cards on both sides. We have seen stories related to desalination plant to oil depots being hit, and we have heard messages from the Iranians that they will not allow most ships to go through the Straits of Hormuz. So this is, I would argue, is a higher level of anxiety for the market than it was prepared to embrace even a week ago.
So this suggests that $110 today, that's just a pit stop, that it could go to 120 or even higher.
Okay, I would like to put that in perspective. Yes, on a month-on-month basis, it is a very dramatic shift in market pricing. A month ago, we were looking at $60, $70 oil. Relative to that, this is shocking. But the world can take some degree of energy pain without capitulating into a recession or outright collapse. We are not in any sort of position like that. We're talking about one choke point in the world. There is plenty of energy, particularly with respect to crude oil around the world. LNG might be a tougher case because Qatar is a very large source of LNG, especially for our part of the world. But if we are going to talk about oil in real terms, adjusted for inflation, oil today, even at $115, is about 45% below its all-time peak. That was in 2008. So we don't think that we are heading into a situation like a worldwide stagflationary risk, prolonged economic slump, none of that. Premised around that, two issues. One, these price levels are levels that the world economy can absorb, not happily, but it can absorb. Our energy intensity has declined over the last few decades, and there are plenty of alternative sources of energy. Secondly, I still think, or rather, I still hope that this would be a short-lived conflagration, and a month from now, month and a half from now, some of this stuff would be a distant memory.
Taimur, you've studied past oil shocks very closely. How does this one compare to the earlier crisis, say for the invasion of Ukraine, as well as in the 70s?
I suppose one area what does give me pause is the Straits of Hormuz has really never been closed. Even during the Iran-Iraq war of the 80s, or when Saddam's troops were withdrawing from Kuwait and setting oil fields on fire, even in times like that, we never had the Straits of Hormuz closing. The fact that only a few ships are going through and things could go worse, that is certainly worrying, and it doesn't really have a precedent. So in that aspect, the historical context does make this particular situation rather ominous than anything that we've seen before. But we should also consider the other side, which is something that I just alluded to, is that from a global supply perspective, alternative to fossil fuel perspective, we're in a sounder position today than we've ever been. So, of course, we will take cognizance of the shock and revise down GDP forecast, revise up inflation forecast, worry about currencies in certain countries in the world where the balance of payments might come under pressure. All of those things are being worked out in real time, and none of those things paint a happy picture. But at the same time, we should take the cognizance of the fact that in real terms, oil is much lower in historical terms, and in terms of supply of energy, we do have quite a few other things going around right now. We're not that vulnerable.
Taimur, appreciate your insights, and we will, of course, be covering this very closely. That was Taimur Baig, chief economist at DBS Bank.